Just in terms of what outcomes are possible here at COP28, we're off to a strong start. What else do you think is going to come from it that is important to Masdar?
Well, I think for us, this COP, Dr. Sultan has always said that this is a COP of action, and that is what Masdar is about. Masdar is about action. We have a mandate to grow our business to over 100 gigawatt gross capacity by 2030, and in doing so accelerate the energy transition and help the UAE towards its commitment to net zero by 2050. So for us, a successful COP will be very much about advancing our collaborations, our conversations with our partners, so that we move closer to that target of 100 gigawatt.
How close are we in that journey, right, in terms of reaching a doubling of capacity, gross renewable energy? I mean, 40 gigawatts, something in that vicinity, according to some of the Bloomberg numbers. Run me through, how quickly you're moving along that process.
So we've always been very clear in terms of what we've communicated with regards to our capacity. We have always talked about circa 20 gigawatt of gross capacity under operation, in construction, or secured through exclusive development rights. We're making significant progress. You will see over the coming days a number of announcements will be made by Masdar around new capacity that we are securing. So we're confident that that 100 gigawatt target remains very much within reach.
The UAE has been trying to put meat on the bones, as it were. They wanted to walk the talk, and so in the run-up to this, there's been a lot happening from the UAE perspective. One of the things that they've been working on is climate finance, and Bloomberg was looking at some of the numbers in terms of the green debt that's been issued as a percentage of total, and it's nothing short of jaw-dropping to see the UAE stand out by virtue of raw numbers from peers like Saudi Arabia and Qatar, and that kind of went almost parabolic from 2022 onwards as we counted down to COP. I'm wondering what kind of work you're doing in terms of raising finance, in terms of being able to give yourself the leverage and muscle to do what you need to do to run after that capacity.
Well, we've always considered ourselves a pioneer, both in the technology side of things, but also on the financing side of things. So about 12 months ago, we issued our Green Finance Framework. SQS1 rated by Moody's Investor Services, so the highest rating you could get. And earlier this year we issued our inaugural green bond, a $750 million bond, which was 5.6 times oversubscribed. So that was the first. That is a pure play green bond. Under our Green Finance Framework, we will only use the proceeds raised from that green bond for new greenfield capacity solely for solar, wind or battery storage. And I think that's a very, very important initiative, not just for us, because what we're tapping into is a new pool of institutional investors. We're tapping into capital markets, but we're using those funds and we're deploying them for new greenfield capacity, predominantly in developing markets. So in doing so, you're bridging the gap between the global north and the global south. And I think that's one of the biggest challenges we face today.
Are you able to quantify your financing needs for 2024? Are you going to be selling more green bonds?
So, again, we have this target to grow to 100 gigawatt gross capacity by 2030. We are growing. We've grown significantly this year, and we will continue to grow. Obviously, we work in a competitive market. We anticipate, based on the pipeline that we have today, that we will be coming back to market with a second green bond issuance, probably in a similar range to what we did this year. The inaugural issuance of $750 million was part of a $3 billion programme, and the intention was always that, subject to growth, subject to market conditions, we would be a repeat issuer.
I mean, to meet some of your targets, you're going to need to look at the mergers and acquisitions, maybe in the vicinity of $50 billion worth. Where's the funding for that going to come from?
So M&A is part of our growth strategy, so I think it's important to realise that, to get to 100 gigawatts, we need a diversified approach to the market.
Correct.
We are a developer of greenfield projects, but we will also look at M&A. But when we look at M&A, we're acquiring assets and platforms that have pipeline. So we're often acquiring, again, new capacity. And the idea would be, that new capacity will also be grown using non-recourse project finance, etc. We're lucky we're backed by 3 very strong shareholders. So, our growth will come from non-recourse project financing. It will come from continuing to use our own balance sheet. And it will continue to come from equity provided by our shareholder.
What would success at COP28 look like? I mean, it's one thing to have the ambitions and the goals and the intent, but what do you think is realistic in terms of outcomes?
Well, I can talk about Masdar, and I think for us, again, it is our business has been built on collaboration, and I think the entire energy transition is about collaboration. And for us, again, it is about having the opportunity to meet with our peers, to meet with our business partners and our strategic partners, and to secure more growth, to announce more deals, and to demonstrate that commitment, not just of ourselves to deliver against the 100 gigawatt target, but our commitment to contribute to the UAE's net zero by 2050.
I mean, you
target.
operate in markets from Africa across Central Asia. That's a very different set of propositions. What do you think can be done in terms of creating sort of a bridge, a framework for you to be able to do the financing you need and to cut through the ribbons and everything else?
So I mentioned things like our green bond. So as I said, our green bond, that is a means by which we have captured capital from the global north, and we are deploying that capital in the global south. We have also announced recently partnership with Africa 50, the UAE partnership with Africa 50 to mobilise capital to advance the energy transition in Africa. We have worked with IRENA on ETAF, again, the energy transition acceleration financing. So I think they're initiatives that we're working on with our partners to try and introduce new pools of capital into the developing world.
How closely are you watching what the Fed's doing, and how that could set us up for 2024? Ultimately, lower interest rates make life a lot easier for you in terms of access to capital. You think the market's getting ahead of itself here?
Look, we will. I'm not going to speculate on where interest rates go. I think we obviously watch that very, very closely. I would say, obviously, higher interest rates obviously have an impact on project economics and impact on tariffs. But also, I think for us, it's been quite interesting because the competitive landscape in terms of us competing for opportunities, some of the capital that was previously looking at renewable energy is now looking at more conventional investment opportunities. So in some ways, while it is a challenge, it is also creating an opportunity because the competitive landscape is changing.